Hi, welcome to another episode of 2 Minutes on Tuesday. Tonight's going to be a short one. It's going to be about interest rates and getting your pre-approval updated because the interest rates have been moving up and down and up and down. Now, for some of you, this is going to be very basic and you're going to go, wow, I can't believe he did a video on this, but I'm doing a video on this topic because there's a ton of people that have never done this before, or they are not familiar with the impact that interest rates have both on their monthly payment and also on the loan amount that they actually qualify for. So I'll give you an example, and these are just rough numbers. These aren't real numbers, but just to point you in the right direction. If you had gotten pre-approved for a loan, let's say at 6.5% interest, and the bank told you you could spend $300,000 at 6.5%, if the rate goes to 7%, you no longer qualify for a $300,000 home. You still qualify for the same payment, and your debt to income ratio shouldn't change. It's a situation where the $300,000 you qualified at was based on a 6.5% interest rate. And if rates bump from 6.5, say, to 7%, instead of being at 300, you might be at 290 or 288 instead of 300. So the reason I bring this up is it's important for you to know this before you go out and shop, especially if you have an older, outdated pre-approval letter. We had someone recently that came to us who was pre-approved for a very significant price, but I looked at their letter and the letter was based on a 4.5% interest rate, which we haven't had that in a while. And so I'm like, hey guys, you need to get this updated because what it says you were pre-approved at 4.5, you're not pre-approved at that purchase price at, say, 7%. So I know this seems fundamentally basic, but there's a lot of people that need to hear this message. It doesn't cost you anything to get pre-approved. It makes whoever did your pre-approval, they already have your information in the system. They just have to recalculate your pre-approval based on the new interest rate that's today. And obviously, if the rate goes down after they give you the pre-approval update, you'll want to have them pre-approve it again, because if the rate goes down and they've got you pre-approved at 7 and the rate goes to 6.75, you're going to qualify for more at 6.75, more purchase price, more loan amount than you would, say, at 7%. So it goes both ways. It's a win if the rate goes down, you get your pre-approval updated, but it's really critical that you get your pre-approval updated in the event that the rate has gone up and it's higher than the rate it was when you were pre-approved. So I'm Sam Miller, RE/MAX Stars Realty. I promised I'd keep this short. You got questions, give us a call, 740-397-7800, or feel free to add a comment down below. Until next week, have a good one. Bye.